Okay, guys, my this is the morning ideas here. I was just realized my mic was muted at the beginning, so here we are. So I wanted to wait today until after the non-farm payrolls, and you can see the non-farm payrolls has brought the market lower. If we go to just see what the number came out as, you could have saw it on Forex Factory here. So payrolls and wages blow past expectations, flying in the face of the Fed rate hike. So basically what's happening here is because the non-farm payrolls number, and we can see exactly what that number was, though it doesn't really matter. You can see that the forecast was 200,000 jobs. We have 263,000 jobs. So a big number there, and why? So why would that bring the market down? You would expect good job numbers to bring the market up. Well, what's happening now is I think that the reason that this market goes down here is because, and it goes down 100 points, is because now it looks like the economy is doing fine, and it's more fuel for the Fed to come out and say, hey, the economy is doing well. We can sustain more rate hikes, and it's not going to hurt the economy, because the one problem with the rate hikes is they worry of the deflationary aspect of that, where it will hurt the economy by tightening on that money supply to try to fix the inflation problem that's going on. But now with the good job number, the market goes lower, because that gives the Fed more fuel for more of these, rate hikes and faster rate hikes, even though he said a couple of days ago that they would slow down. So again, this is one of those reasons that I don't like to trade news, and I tell people to be very careful around the news, because sometimes a good number is a bad number for the market, and vice versa, because all of this stuff is already priced in, and any kind of shock could, cause a kind of a chain reaction in the market, and it may not be what you expect, and a lot of times it isn't. It's like, well, what a great jobs number. How does the market go down 100 points? Well, it's because there's a cause and effect to what that jobs number means for Fed rate hikes and all of these kind of things. So if you're wondering why you get those kind of moves, that's why. And I don't know that that's the exact reason. I mean, you could probably do your research. I'm not an economist, but those fundamental reasons. And again, the levels don't really matter that much when you're seeing big fundamental changes in the market based on those geopolitical news events. Okay, so we're trading 40.27 right now. You can see that we're basically pulling back big picture to this area. Let me pull this up bigger. We pulled back on that news right to 40.10, and we've bounced from there. That was the number, the level I had on the chart from yesterday. And it's actually been there for a couple days. We moved above it on the news, and we've pulled back to it on the news. What I would expect to see here is some kind of a bounce to see if we can sustain the bounce. If not, we'll probably come back to 4,000. And if we fall back in, then I'm looking for 39.50 today. Okay. And I think that we will take all of this news back from when Powell was talking the other day. If we can't hold on to 4,000, I think we come right back and take it all back and come back to 39.50. However, if we do get some, if we are able to sustain the bounce, what I would expect to see is us to take back the entire news move from today, which brings us right back up to 40.81, okay, in that area. So again, 39.50 or 40.81, I just think it depends on this level here. If we can stay above 40.10 and trade off of the open and hold above 40.10, I think that we will push higher. If we can't, I think that 39.50 happens almost definitely today. We'll take all of the news back from the Fed. From when Powell was talking the other day, not even the minutes, just him speaking about, different rate hikes. So you can almost see, though, well, you can't almost see, you can definitely see that much of these news moves revolve around those rate hikes. So, Powell talking pushed it up, and then like the jobs report causes that chain reaction that I was just talking about, potentially to move it back. So those big bars that you see on the screen, this one was about the inflation, right? Inflation. This one is about rate hikes, which is directly related to the inflation. This one is about the jobs report, and then it goes down because of what can happen with the rates and inflation. All of this stuff, this is the main driver of the market, and that's why you really need to understand what's driving the market. Today, it might be something different than tomorrow. The context is always going to be a little bit different, and that's why I don't like to trade some black box thing where if the market does this, I'm going to do that, because there's always a story behind it, right? And you have to be able to put the pieces together to kind of make up that hypothesis. So that's what I'm looking for today. 39.50 if we can't hold on to 4,000, but I think 4,000 on the open, 40.10 will be tested off of the open. We're only 10 points away from it. And I expect to see a pretty big fight there. And I'm looking for 39.50 if it can't hold. Okay, guys? Let me know if you guys have any questions, and we talk to you guys soon.